Welcome to the Broker Life Podcast. My name is Mark, and I'm a mortgage broker with Mortgage Connection. On this show, we dive deep into the mortgage and real estate industry and listen to experts share their stories, advice, and knowledge. Today's guest is Kevin Kennedy, Head of Underwriting at KDK Financial. Welcome, Kevin.
Thanks for having me, Mark.
No problem. So, Kevin, why don't you just tell me and our audience a little bit about who you are and how you sort of ended up at KDK?
Sure. Yeah. So I'll dive in. So my name is Kevin Kennedy. I founded the company back in 2020. So March of 2020, right when COVID hit, actually, funny enough. The reason I started the company is because I just found a need for it. So I was in the auto industry for about 20 years. I worked for one of Canada's largest auto groups as a finance director. So I saw every piece of file that came into the dealership. And quite often we'd see anywhere from 2 to sometimes 5 times a month where a client was being sent in to the dealership by their mortgage broker to reduce their car payments. And it was just really, it was just a bad experience for the client, and it was really unorganized. So once I figured out that there was, after speaking to a couple mortgage brokers I know, once I discovered there was a need to have a service directly for mortgage brokers, I came up with the company, and ever since then, the rest is history. So all we've done is we've put the mortgage broker in complete control over the transaction, and then delivered a really good customer service for the client.
So what does KDK actually do?
So KDK, the majority of our business, it's essentially a mortgage broker solutions company is what we've branded it. It's a company specifically for mortgage brokers, and all it does is it just allows you guys to do your own auto loans. So the majority of our business when we're working with a mortgage broker, it's improving debt servicing. That's the number one problem that you run into, where the client's car payment's too high and you need it reduced. So that's when we take over, we refinance the auto loan, stretch it out as long as possible to get the largest drop possible to help your ratios.
This is magnificent. And for people listening and wondering why, this is important for mortgage brokers. On the mortgage side of things, we have a number of criteria we use to qualify deals, but the main one's the debt ratio, as you kind of talked about. So, in general, you can generally borrow up to about 40% of your income for a mortgage. And, when ratios are tight, so when the debts are higher than the income or the income's not high enough to support the existing debts in a mortgage, we have problems. And usually we can add a cosigner, we can put more down payment down. And if none of those options really work, this is where you guys come in. And so, I had an example the other day I was just talking to you about before we went on the call here, where I had a client who has $1,000 lease payment on their car, and it was really making things tricky for the debt ratio. So $1,000 a month for a car payment, and she's trying to afford another $2,000 a month for the mortgage. It was making it tough. So by referring these clients to you guys have the option to basically re-amortize these loans, do some magical things, and get that payment lower so we can make the deal work on the mortgage side. So, so what makes you guys different from somebody going to a car dealership and getting something similar, getting their loan refinanced?
Yeah, so good question. Mostly, I would say speed, value, because it costs us less. We don't have any fees or anything where a dealership's going to quote you fees. But the number one thing is probably customer service. Like and that's part of the reason why I started the company, because the client would come in and it's like going through a gauntlet, right? So you got the sales department trying to sell them a new car, and quite often they were successful and then caused more problems and cost the mortgage, I'm sure, in a lot of those cases. So the nice thing about us is that the mortgage broker is in control of the whole situation, and it's the best value for the client because we don't charge any fees. So really it is just it's just the ease of processing and overall value for the client, and speed. Like I said, we can do a file in under 24 hours if the client's on the ball, where if they go to a dealership, it could take up to a week probably, right? So it all depends.
Okay. And so who are your type of clients? Do you see just a broad range of people, or do you end up seeing kind of similar types of folks that come in?
Yeah, so good question. I mean, it's a good mix. So credit's always good, because I mean, at the end of the day, if they're qualified for a mortgage, their credit's good. It's a lot easier to get a car loan than it is a mortgage. So they're pretty much auto qualified if they're approved for the mortgage. But we see all sorts of situations. Like there's situations where, debt servicing is a bit of an issue, and we help out there. But we've also got, super successful clients that, they might not even have a loan on their car and they own it free and clear and they're looking for quick cash. So we can do a loan attached to the vehicle, cut them a check for whatever amount they want, and then they can make an investment or really do whatever they want with it. So really the company is there to do anything auto loan related. It just comes down to what's going to help your client, and we'll dive in and find a way for a solution.
So how much easier is it to get one of the loans with KDK versus a mortgage? And I can tell you firsthand, getting a mortgage, there's a ton of paperwork. There's pay stubs, letters of employment, T4s, down payment verification. It's a lot of work. And then obviously it's a much bigger purchase, hundreds of thousands of dollars. So, and banks are very risk adverse with this. So is it pretty straightforward? Do you need a lot of documents and paperwork and red tape, or what's it look like?
Nothing. It's crazy. Like I love talking to mortgage brokers because once they discover how easy it is for auto lending, they're just blown away. So just to give you an idea, like for proof of income, 90% of files require none of it. So they just go off stated
Hmm.
income. So as long as the income's submitted within the realm of reality, like you can't, work at Tim Hortons and say they make 200 grand a year or whatever, but as long as it's kind of within range, the bank auto approves it. And an analyst doesn't even look at an auto loan most of the time. It's just the computer picks up an algorithm, says, hey, credit's this good, income's there, green light, go. So it really is a
Hmm.
lot different than what you guys are used to dealing with, and advances. So you guys are used to like that 80% advance and stuff like that when you're refinancing a mortgage. With the auto lending space, with average credit, we can get up to 140% loan to value. And if they've got really, really, really good credit, we can get up to 180%. So the advances are the same. The qualifications are super simple. Even situations like I had a file last week where it was a cosigner removal. So we do a ton of that. And the clients literally just bought the car a month prior, and the client needed a cosigner because she was young, didn't have enough credit, whatever it was. And now that the car loan was appearing on a credit bureau, our banks just looked at it and said, yeah, they've got auto history, qualified her, took off the cosigner. So it's a whole different beast. It's a computer algorithm that looks at the file and decides to approve the file. And some of them would just make you shake your head, to be honest with you. But yeah, it's a way easier way to get approved. Yeah.
So is this a proprietary software algorithm with KDK, or is this the lending industry, the auto industry in general that sort of operates this way?
It's the automotive lending industry as a whole. So for the advances, it's just the way it's set up. So the banks will allow that type of advance because of the way that a used car contract typically goes down. Because whenever you're financing a car, typically, you might be trading in, and your trade-in's not necessarily worth what you owe on the loan. So the bank gives us those parameters to allow the extra advance on top of the actual value of the vehicle. And then you've got, people that want to add on accessories, extended warranties, loan insurances, things like that. So the bank just gives us that bubble that we can advance so much over the value of the vehicle. So that's why it
Give
works
me
that way.
give me an example. So like on an average vehicle of whatever, 40,000,
Yeah.
what's a typical loan? Like if you said the loan to value can be up to 180%, are you basically saying if the loan you need is 40, you can almost take out almost 80,000?
On that calculation, yeah. So I just typed in 140% for average credit, so we can get a $56,000 loan based off that scenario if the vehicle's worth 40. So if they owe 30,000, you're looking at getting, up to $30,000 cash back on top if they need it. So there really is a ton of room. So the 180%, you have to be really, really strong. But yeah,
Okay.
you can get a $72,000 loan on a vehicle that's worth 40K if the credit's absolutely
So
spectacular.
why would somebody want to do that? Why would somebody want to take out another, whatever, 20 grand on an auto loan? Because presumably the rates are going to be higher than a mortgage, obviously. So
Yeah.
so why would people do that? What examples would they do that?
So the motivators that we see is sometimes short cash down, right? So and it's not always like large amounts, right? Sometimes it's only 10 grand or 15 grand or whatever. So they're short on cash down, or there's an opportunity to close out higher interest rate debt. So quite often. So we always start out with a quote for a refinance to drop the payments. So there might be a situation where we can save your client, say $300 a month on their car payment, but it's not enough. So what we do then is we implement cash. So, okay, so what if we add in 10,000 or 15,000 and close out a line of credit or a Fairstone loan or a credit card or something else that's getting in the way? And then that helps with the debt servicing a bit further. So the majority of it is, like I said, to close out other debt, or if they're short on cash down for qualifying for the mortgage. That seems to be the real.
Down payment.
Yeah.
So really, you're not just a auto loan company. I mean, you do a lot of like refinancing, it sounds like, which is really not too far from just what banks do in general, right? I mean, you could go to any bank and just get a debt consolidation loan, but you guys can work that too.
Yeah, we actually the primary piece of our business is the refinancing. That's what we do the most of.
Really?
We do acquisitions as well. So that's if a client wants to, buy a car off Auto Trader, Kijiji, or just doesn't want to deal with the finance department at a car dealership, we can set up a loan, give them a certified check to go make the payment. But that's literally 10% of our business. The majority of our business, like I said, is we're partnered with mortgage brokers all across the country, and we just facilitate refinancing to help them get the mortgage done. So that's the biggest piece of our business.
So just to be clear, you need to have a vehicle in order to work with KDK. So you can't just go and just get a $10,000 loan and with no security at all. Okay.
It has to be an loan or a boat loan or an RV loan or a trailer loan. So we do all those assets. We can even do a motorcycle. So I was speaking when I did a podcast with Scott Peckford. He came up with this line. He's like, if it's got a VIN, you're in, and that's kind of and that's really
That's catchy. Yeah, that's catchy.
and it's the case. So yeah, so anything with a VIN number, we can pretty much attach a loan to it or refinance it to help it with servicing. Yeah.
So I have some buddies in the car industry. I have a friend who runs a dealership out here, and one of the common things that he says comes across is people who are just in massive negative equity. So they'll buy that car and then they want a new car 2 years later, and the value keeps dropping, but their loan's higher. So in scenarios where clients own a car that's, let's say, worth 40, but they owe 60 on the loan because of all this negative equity and debt refinancing, et cetera. Is that a scenario where, because you can over leverage the vehicle, that you can try and reduce that payment and you can get out of it? But I mean, you can't get away from the debt, obviously, but can you help those types of people?
Yeah, for sure. So somebody that's, 20 grand upside down, it wouldn't be a cashback play. But if they're, a year or two into the loan, we can certainly re-amortize it to help drop the payment. And we're always very careful when we present those options to the client. We make them aware of the risk if they're adding a significant amount. When I say the average file is only like 10 grand or something, and they've got equity in their vehicle, so it's not a huge concern very often. But in situations where there is negative equity and it's something that should be brought up to the client, we always explain to them that yes, you're going to have a lower minimum payment to help it with your mortgage approval. That's there, but look at it as a secondary loan and make extra payments, right, once you're done with the mortgage, because it's something that you want to chew up. Because the nice thing is you can add in a lot of times 10-15 grand cash to your car, and your car payment doesn't even go up, right? So that's nice for the mortgage broker, good for getting the mortgage approved, but that doesn't always necessarily mean you should leave it that way, right? So at the end of the day, once the mortgage is closed, we always encourage them that you should raise it a few $100 just to help hammer away at the extra, and then hopefully they take our advice and do so. Yeah.
Okay. So who are the lenders, and on average, what are the rates? What's the range of interest rates?
Yeah, so we're signed up with 21 lenders right now, every major institution. So we've got, everybody, RBC, TD, Scotia, CIBC, multiple credit unions, pretty much every bank that's on the market we can use. Rates are a little bit high compared to what they've been in the past. We're still the best. So we're 2 to 3% less than the branch, and we're the exact same rate as a dealership. The only difference is we're on the lower end of the scale. So right now, if you go into a car dealership to finance a used car, they're going to quote you anywhere from 8.9 to 9.49 to 9.9, like in that range. And we're always 8.9. That seems to be the average rate out the door, which is a bit higher than it's been. Like if you asked me last year, about maybe 10, 11 months ago, actually, our average rate was probably 5.5. We're exactly the same. We access dealer services, so we're the exact same rate that's out at the dealership, which is typically a significant savings versus the branch.
Are these variable rates or fixed rates?
All fixed.
Fixed. And so these rates are not based off prime rate, obviously. Then, so what are they based off of? Are they based off the bond yields, like mortgage rates, or um, how the
Yeah, I
rates get
mean,
calculated? Who's
not a
setting the
hundred
rates?
percent sure on that answer. We pretty much just get a notice from the bank saying this is what the rates are that month, and they renew it every
Okay,
month. So, how the bank comes up with their yield and how far they spread it over prime, it's we don't I don't know the exact answer to that. All I know is compared to what's on the market, we're always going to be 2% less than the branch, double the amortization, so that's key, and exactly the same as the dealership can offer. We just tend to give the lower end of the rate because we've got no overhead. We don't have inventory. We don't have staff, or we have staff, but we don't have to have high rates in order to stay in operation.
have a big branch or something. Now, are there different types of loans that KDK offers, or is it a standard auto loan, or is there different levels or lines of credit or different products you offer?
So I mean, we have different assets we can loan on, like I discussed with the motorcycles, trailers, RV stuff like that, but only one type of loan. So it's going to be an auto loan or an RV loan or a boat loan, no separate pieces of credit or anything like that that we can offer.
And how long can you generally loan? Does it depend on the year of the vehicle, or is it
It
how's it
does.
work?
Age is the biggest thing. So the newer the vehicle, the longer the term. So if it's 2020 for an auto, anyways, if it's 2021 and newer, we can get up to 96 months, where the branch would give you a 5-year loan, then and vice versa. If it's 2018, we can do up to 84 months. So I mean that's
Okay.
good amortization for a 5-year-old vehicle. So that's it. And then once you get older, it's a little bit more difficult. So the oldest we can actually finance is 2016. And the max term on a 16 is 60 months. And then 70 or 2017, we can do 72 months. But most
So a
of the,
7-year-old vehicle, you can still amortize it over 5 years.
yes. Yeah.
Yeah. Okay. Um, you already mentioned there's no fees, right? So just to make it clear, if you were to walk into a auto dealership, what kind of fees would they charge, and how much are you saving by going with KDK on average?
I'd say the average fee, documentation fee from a dealership's around $700. But
Oh, that's pretty significant. Yeah.
it's a lot, right? Anytime you can save your client $700 and give them a better experience and get your paperwork quicker, you're gonna win. And that's the thing too. Like you guys rely heavily on the documents to help satisfy the mortgage condition, right? So the fact that you get it immediately helps speed things along for you. So at the end of every file, we always send three things to the broker immediately after we're done. So we'll send you proof of the new bank contracts showing that the loan's been reduced, so you can send it to your lender and prove that fact. And then we also send you proof of loan closure showing that the old loan is gone and paid. And then of course we send your commission as well. So it's three things that you get within 48 hours typically after the client's finished signing.
Hmm. Are there any niches that you guys have? And we kind of talked about it already. Let me rephrase it actually. So, if this is a company that's directly supporting mortgage brokers, can people just come to KDK without the referral of a mortgage broker? Are you open to other avenues, or does it have to come from a mortgage broker?
Yeah, I mean, we do get a lot of spillover. Like we're doing right now hundreds of contracts a month, so we always get the spillover. So once they do their mortgage, they always call us down the road to do acquisitions and stuff like that. We're not open to the public, like we don't advertise, anything like that. We like I said, we built a company for mortgage brokers, but absolutely, if somebody hears about us word of mouth or whatever, and they just need help doing a refinance or buying a
You're going to help
car.
them.
100%, we will. Yes, every time. Yeah,
Okay. And also, if I as a mortgage broker or anybody else, if they do refer the deal, but we can't do the mortgage, you can still obviously help them that way, right?
absolutely. Yeah, 100%. And a lot of our files, well, most of them are for helping the mortgage get done, but a lot of times they're not. Sometimes they just see an opportunity like on the exit, right? You're done the mortgage, you didn't need to do any auto loan restructure, but you see an opportunity whether they have a co-sign loan that we can split up, right? Or you see a little bit of credit card debt that you want us to consolidate or whatever it may be. We can help out the client no matter what. It doesn't necessarily have to be something to help get the mortgage in every case.
Can you break down how the co-signing options work? Why would you want to add or remove co-signers?
Yeah, so the adding, nobody ever really wants to co-sign for somebody if they can avoid it. Removing the co-signer, it's good for everybody. It helps the client, right? And it also gives the other person financial independence, right? Nobody ever wants to have somebody co-sign for them. So the fact that we can break it up so easily is just a nice thing to do when you have the ability to do it. And co-signer removal, like I said, is so easy to qualify for. It's like I said, that last one I spoke about where they've only had the cosign loan for a month and we got it done. It's one of the easiest things that we do. And we also do commercial lending. So quite often when somebody goes in and they're self-employed, they buy a truck or whatever it may be, the dealership requires them to co-sign with the company. We can break those up as well. So we can actually take the personal guarantee off and then do the loans solely under the commercial lending, which is great because helps them write it off, and it obviously removes it from their debt service obligations. So any type of cosigner is incredibly easy to qualify for.
So what's an example where you'd want to take one off? I know we get clients where usually it's like a parent co-sign for their kid's auto loan.
Yep.
Why would we want to do that? Why like what's an example of that coming through your door?
Debt servicing, right? So even though your client has co-signed for somebody else, it's still going to throw out your ratios, right? So I mean that is the number one reason to remove it, to help with debt servicing numbers every time. Yep.
Okay. I saw on your website after I was doing a little bit of research that you guys do some debt counseling. Is that the refinancing stuff we were talking about, or is that different?
Debt counseling. I don't think
Yeah,
we
I thought I saw that on there. Something about now you're gonna make me look it up here. But
we just
I,
revamped
I
the website too, so it's probably not even there anymore. But what you're probably looking at was probably the if they've got subprime credit, we can help reestablish and build credit. That's probably what you're talking
okay.
about. So sometimes you might get a client that comes across your desk and you can't get a mortgage for, but you see an opportunity, you see that they're paying 20% interest or whatever it may be on their current auto loan. We'll take those too. We'll help them get into a better position, whether it be refinancing the asset at less of an interest rate with a major bank. We're there to do that. We even have files where, you've got
I
somebody.
found it here. I found it here. So debt counseling partnership. So this was sent out November last year.
Oh, a newsletter
Um,
from Chris, my
yeah.
business.
So most recent partnership with debt counseling groups that works nationally.
Yeah.
If your client's not responsible with their debt, or if they're on their last leg and want to look at their options to reduce their debt after mortgage refinancing and or service isn't enough, I can make introductions to anyone interested. So this is like you referring out to another company. Okay.
Yes. So mortgage brokers are our biggest piece of the puzzle. We also work with a lot of divorce attorneys, right? Because a lot of times when you're breaking up a marriage, you need to separate auto loans, stuff like that. But we also work with debt counselors. So just for that reason, sometimes somebody will think that they're at the brink of having to go bankrupt or whatever it is, right? And we can at least save them from that or slow it down or do something to give them another shot, because it might be as little as, hey, like I'm struggling because of my car payment, right? So we can drop the car payment, or they're drowning in credit card debt. We can help with that too. So debt servicing, debt solution companies as well use our company on the regular to help. Yeah, for sure.
Okay. Now, let's talk about your company. So you have created this beast, and it sounds like a well-oiled machine, 100 deals plus a month. So it's working well, and in just really 2 years' time. So would you say that you hit this at the perfect time with the COVID crisis, and how the auto industry was going through a massive flux of, I think there was a massive supply issue with vehicles coming in, and because of that, auto prices were sort of elevated for a little while there, right? I actually traded one of my vehicles last year and actually made money on it. I purchased it 2 years prior and made like $7,000. So it was crazy.
Yeah, it's
Um,
common. Oh, yeah.
so is this a good time to enter? And at all this growth that you've had, do you see this sort of sustaining, or is this a little bit like the mortgage industry where we were like flooded because interest rates were like 1% and we were so busy, and now things are kind of normalizing with higher rates? And then what kind of team do you have around you?
Yeah. So first question is, as far as where I see the company and things like that. So the harder it is to qualify for the mortgage, the busier we get. So it's
Mhm.
one of those things that you can kind of look at.
Interesting.
But I
Yeah.
mean, auto loans are always going to be kind of a sore spot for mortgage brokers, at least from the feedback that I get, because it's always going to be something that, even if it's not necessarily doing it to get the mortgage done, it just allows the client to, have a higher spending purchase. So I don't foresee anything happening that could possibly slow it down. Obviously, the harder it is to qualify for a mortgage, a little bit busier we get. But yeah, so that's how I don't really foresee any major changes. Even if rates go down in the mortgage industry, there'll still be a need for KDK. So that's something that'll always happen. And sorry, what was the second part of that question?
Your team. So you
Okay.
have you're head of underwriting. So you sign everything off. Who do you got around you supporting you? How
Yeah,
big
so
is
I've
your
got
company?
a really strong, so we got a staff of 7, got a really strong business development team that signs up brokers and divorce attorneys and stuff like that. It's headed by Chris O'Sullivan, which I think you've met Chris, and he's the one that sends out the newsletters. And then I also got a client care team whose only job, there's 2 girls, the only job is to make sure that the client has a good experience. So we and the clients look at us as kind of an extension of the mortgage broker, right? So customer service is like A1. So we want to make sure that when we give the client back to you, that they're at least in a happier mood than they were when they came to us, at least. So client is number one. We want to make sure that they're having fun. It's a good experience. So that's key. And then we've got underwriters that just process the paperwork really, really quick, and then a really strong accounting department that gets the liens paid off full and gets us all the docs very quickly that you guys need to satisfy your end. So yeah, definitely a well-oiled machine. It's literally like the biggest response I get from brokers is, I can't believe how quick you guys are. And that's just how I've always done business. And even when I was in the car business, I look at every file as a race from start to finish. I've always taught that time kills deals. So at the
Yeah.
end of the day, we try to get everything done as quick as possible. We can, like I said, we can do a deal in under 2 hours if the client's on the ball, right? So speed is a big thing for us. Yeah.
Yeah, it's the same in the mortgage industry, right? You start a pre-approval and let that thing hang for 6 months. I mean, the likeliness of them coming back is pretty low. I got some interesting stats here I wanted to chat about, and I want to get your opinion about where you think the market will go. Kind of what you alluded to with, you know, your business kind of goes no matter what, busy market or not. People are always buying cars, but I think this kind of like solidifies your point. So, uh, motor vehicle registrations from 2020 to 2021 were up 2%. Um, Gross sales of gasoline were up 4%, 2021 to 2022. And what's also kind of interesting, I don't know if this really applies or not, but 94% of vehicles in Canada were gasoline powered. So about 950,000 of registered vehicles, and only about 150,000 were battery electric hybrid or plug-in electric hybrids or whatever. So in terms of the growth, there's obviously been a steady growth. And I think you can probably attribute that to maybe immigration, more people coming in the country, more people needing cars, I suppose. And then also what's interesting is the amount of people still driving motor gasoline vehicles, which maybe isn't super shocking. I actually thought that number would be a little lower with all this massive push with hybrid vehicles, with Teslas everywhere. I mean, I'm out in Victoria, and you don't go 2 minutes without seeing a Tesla. It's
Yeah,
insane.
no, for sure. Yeah.
Uh, so what's your opinion on where you see the auto loan business growing to? And do these stats, are they fair to say that this is going to be a continued trend upward, or do you think there's going to be some sort of disruption um, with maybe climate change and how things might shake up the industry?
Yeah, I think like right now, the numbers are where they're at, but I think in about 10 years, gasoline engines will be obsolete. I think it's something that'll just
10. Wow.
no for
That
sure.
94% will be flipped upside down.
I think so. Yeah, no, for sure. Things happen very, very quickly in the auto industry. And it's all about the other manufacturers getting on board, right? So it's a slow, steady crawl. It has been, but it's just picking up. Now you see like Ford and Chev and Dodge, everybody's starting to implement their own electric vehicles, where before it was just Tesla. And as soon as the pricing comes down, it becomes more affordable for the everyday buyer, right? So electric cars are awesome, but they're premium, right? So they cost quite a bit more money than a regular gas engine. But over time, and that's why I kind of say 10 years, I think that the pricing is going to come down, where the everyday person, and combined with, the government and stuff like that, implementing tariffs and charges, things like that, where eventually the gasoline engine will be obsolete. And maybe I'm a little high in 10 years, but if I'm a betting man, and I would say over 50% for sure, I would make a hard bet on that in the Canadian market. Yeah.
Uh, do, you probably don't have these numbers in front of you, and I hate to put you on the spot, but what would you estimate is your current sort of electric versus gas right now that you're seeing for the auto loans in terms of security?
Ooh, in BC.
Well, where are you? Where
Oh,
are you located?
Yeah, I'm in Alberta. That's our home base. We do business all over, but it's interesting to see. Like in Alberta, I see a lot of pickup trucks, Saskatchewan pickup trucks, BC,
Yeah.
Ontario, a few more Teslas. It's honestly it's a mixed bag. Alberta's a little tough to hop on the electric bandwagon right now just because of the climate. It gets
Yeah.
really cold, right? So a lot of people have concerns with that.
Yeah.
It's a mixed bag. Yeah, I can't really put a hard number on it. Now I don't pay too close of attention. It's just funny when I see a BC broker. Quite often, it's a Tesla for sure. Like you said, you see one, right? But yeah, I don't really have a firm answer on that one. Yeah.
Well, I was born in Edmonton, so I'm an Albertan. I'm born and raised, and we moved our family out here almost 2 years ago to try and live the West Coast life. And it's a long story. We might be moving back, put it that way.
Okay.
But
Yeah.
it's interesting to see all the Teslas and to see the Tesla factory out here that they built. And it's it almost seems to be like a social economic sort of like vibe. Like it's very different province of BC, and like we don't need to get into the deep politics of how social and liberal it is over here versus Alberta, very conservative. But I think there's something there, and so it does sort of make sense that there's less gas powered vehicles here because a lot of people care very much about the environment. It's very important here. And if you're an Albertan coming over here and you say, "Oh, it's not that big of a deal," I mean, you'd be mistaken. You get yourself into a quick fighting, uh,
Yeah, I think
conversation. So
yeah, no, for sure. I can see that. I think the biggest motivator for Alberta is honestly the climate. Just because, and I don't know much about Tesla, but I do hear that it's not really prone for, minus 40 and stuff like that. But you're probably right too. The social aspect of it too is probably a factor. But at the end of the day, once time passes, technology is going to get better, right? That's the only thing that happens with time. So,
yeah.
and then phasing them out and yeah, so I think eventually it'll be completely I think gas engines will be wiped out sooner than later for sure.
Okay, let's wrap this up soon here. I want to ask you, do you have any tips or advice for people that are considering maybe refinancing their auto loan? What's maybe one tip you can give them if they're considering getting into or trying to change up their loan?
Yeah, I mean, as far as the tip is concerned, obviously deal with KDK. It's going to be the best value for you. But make sure it's a good decision. Like if you're paying, if you're with Ford Credit or whatever and you're paying 0%, don't do it. Like don't do the refinance unless it's going to get you the house and you weigh the pros and the cons and it's something that makes sense for you. But just to do it doesn't make sense. Make sure it's a necessity, something that's absolutely going to help you, whether it's paying out other debt, just really and you know what we've done so many of them where we can help guide them as well. I've told many people not to do a refinance. We always look out for the client's needs at first. So but yeah, the rule of thumb is make sure that you understand the changes and what it's going to do. And we were talking about earlier about making extra payments to chew away the negative equity. So just make sure it's a good decision. And most of the time it is a good decision because it's going to get you the house that you need, or clean up some high interest rate debt that is costing you more than it should. So
That's fantastic. I love it, Kevin. And I love everything that you guys are doing at KDK. And I know that you guys are my number one go-to. You're on my website. I'm promoting you guys all the time. So use KDK, people. This is definitely a value add for you. So I want to end the call with something that I call a speed round. This is just more of a fun, like this or that thing. I think people just like to kind of get to know you on a deeper level and just figure out who Kevin is. And
yep.
these are specific handpicked questions that I've asked every guest. So I'm going to do this funny
Great.
sort of bloopers thing at the end of the year. So
Yeah.
um, so let's run through this, and then we'll let people know where they can find you. So in no particular order, house or condo,
House.
fixed or variable.
Next.
Hmm. Are you a lift weights guy or run?
Neither.
Nobody said neither so far. You got to
There
pick
you
one.
go. I'm honest. Yeah.
Sugar or salt?
Sugar.
Yeah. Beer or wine?
Beer.
Beer and sugar. Yeah, we align there. Morning or evening?
Morning. I'm up at 5 a.m. every day.
Have you always been a morning guy, or has that kind of shifted later into your life?
Later in life, I think once, yeah, mid 30s, yeah, something like that. Something changed. I go to bed at 9:30 at night, and I'm up at 5 o'clock every morning, pretty much. Yeah.
Yeah. BMW or Mercedes?
Oof. BMW, I think. Yeah.
Hmm. I had a guy on last week, a lender at MCAP, and I asked him the question. He's a big car collector, but he collects like GM cars. He's like, you need to add GM in there, man. So it was neither for him, but
Yeah.
it was Corbin. You a sports guy?
Not really, honestly. Like I follow like the playoffs and stuff like that, but I don't really not never really got into sports. I like to golf. But yeah, that's as far as I take it for sure.
So if I ask you who your favorite sports team is, you wouldn't have one?
Not really. Like I'm hopping on the Oiler bandwagon, but like I don't have a favorite team. When I was younger, I used to follow the Blue Jays a lot, right? I used to be a Leaf fan back when I was a kid, just kind of just
Oh, careful. Yeah,
I'm,
careful with your words there.
I'm an Oiler fan now. I hopped on the bandwagon, but yeah, no,
There you go.
no favorite team or anything. No.
If you could live anywhere in the world, where would it be?
BC.
Really?
Yep. Yep. I'm a
Anywhere in
big golfer.
particular?
Just no, not really. Just somewhere, on a lake, near a golf course. I'd be a happy guy. Yep.
Yeah. Most people say like Hawaii or Mexico or something. And
I want to stay Canadian, man. I love our country.
yeah,
I just want to extend the amount of time that I can golf. So BC is my pick.
amen. Well, if you're ever out here, give me a ring and we'll go for a round.
Percent. Yep.
What music are you listening to these days?
Yeah. Kind of get the gears for this, but country and hip hop and rap. That's
Hmm,
my genre. Yeah. It's
that's
kind of
that's quite
on
a
both
mix.
spectrums, right? Yeah, no, for sure. But yeah, that's it.
Two more. What's your favorite movie off the top of your head? Go.
John Wick.
Ah, good one. Hmm. And last one. What's the last book you read, or what's your favorite book?
Not a big reader, honestly.
Audiobooks, podcasts.
No, I honestly like I don't really follow any podcasts and I'm not much of a reader. The last book I read was 1984 in high school. Probably not something good. I hope my kids aren't listening to this. They should read books, but it's never been my thing.
Well, the Audible's a big deal right now, right? Kids are listening to audiobooks, and I'm a big. I do a little bit of both. I like the feeling of a book, and I like to make notes and read. But it's just way easier if you got a podcast or something in your ear. Okay, awesome. Appreciate this, Kevin. Where can people find you or KDK?
So to find the website, kdkfinancial.com, my contact information's all over there. So you can email me, call me, whatever. I'm always available. And that's probably the best way to start is just go straight to the website.
All right, appreciate you doing this, man.
Hey, my pleasure. Nice to meet you.